Hello, everyone. Thank you so much for joining us for another weekly wrap-up. My name is Jeremy Kronemeyer. I'm Operations Manager for Wickham Financial Group. I have Graham Wickham here, President and CEO of Wickham Financial and Insurance Services. Graham, what happened in the markets last week?
Yeah, thank you, Jeremy, and thanks for our listeners jumping on the call. This is going to be getting pretty close to wrapping it up for the year. But we've seen just great performance in the markets overall, bounding in this last part. But we saw a pretty mixed performance for the S&P. It was down about 0.6%. The Nasdaq was slightly up. The Russell was down about 2.5%. If we look at Treasury yields, those rose as some inflation data came out and showed some prices that were increasing. If we continue with inflation and rates, we saw the CPI and the PPI report indicating some rising prices. The 12-month inflation rate did come in about 2.7%. Now, that's not quite the 2% that the Fed would like from a consumer price standpoint. And then if we look at a wholesale price standpoint, that came in at 3%. Even though the Fed is still planning on cutting as we get closer to this week where the Fed meets to make that decision on Fed funds rate for December. Now, if we look at oil prices, we did see crude oil prices jump about 6% as we were looking at China coming out with some stimulus plans. Economic indicators, we did see the U.S. small business confidence hit about a 3.5 year high. Non-farm payroll growth did slow a bit. Unemployment rates, claims did rise just a little bit. Now, if we go overseas and look at the global markets, we saw Chinese stocks initially surge on some stimulus news, but then lost some momentum. Euro central banks, the Bank of Canada, both cut rates. We did see Australia hold off from lowering rates at this particular time. And the Bank of England is pretty unlikely to cut rates despite some rising inflation expectations. Now, if we roll into this week, what are we looking at? Well, we're going to be looking at generally the U.S. being in focus. Our FOMC, that's the Federal Open Market Committee, is going to be meeting Wednesday. It's a two-day meeting, Tuesday and Wednesday, and they're going to make a decision on interest rates. And I think it's pretty baked in the cards that they're probably going to lower 25 basis points. And then what they do after that, well, that's going to be a question mark because as I was mentioning before, inflation, economic numbers, they've been coming in relatively strong. So what's the likelihood or the need that the Fed needs to lower interest rates to stimulate the economy? Probably not as much. So we'll have to wait and see what their judgment call is going to be on that. But we're going to be looking at some economic data. We'll look at the U.S. core PCE. That's forecasted to be about 2.9% year over year in November. Then we'll get the December flash PMI numbers. Those results will be due. And then we'll be showing probably some slowdown in some service, but maybe some improvement in some manufacturing sentiment numbers. Now, globally, we'll be looking at China. They'll be releasing their industrial production and retail sales figures. The Bank of Japan is pretty unlikely to hike rates at this particular point, despite some supportive data. Now, the Bank of England is expected to hold rates at about 4.75% amid some concerns about some tax hikes. And if we look at the UK's November CPI report, it's also going to be due. And then we're going to flip over to Germany, who's really their economy has been struggling a lot. They're probably facing a no confidence vote with a potential leading to a snap-in election that could probably pop up in February. So those will be some pretty interesting events internationally. Jeremy?
Got it, Graham. I had a question for you. And over the last week or so, the Nasdaq's really had a pop up with those Mag 7 names. What do you see going into Christmas and into the new year for those?
Yeah, I think, we're getting into that end of the year, a lot of window dressing, as we talked about before. So advisors, institution, portfolio managers, they want to show their clients that they had those names in the portfolio. So if they were light, They were adding them in there, and that's probably helping that momentum through the end of the year. It's usually a pretty positive time anyways. So usually what's worked is usually what's going to work. Now we're kind of expecting maybe a reversion of that, maybe some profit taking coming into the new year, and maybe a look back at the underperformers, maybe those deep value areas that is deeply underperformed, like utilities and staples, and maybe some material side. I wouldn't be surprised if some profit taking after the first of the year leaves the stuff that's run up the most and maybe kind of drifts over to the stuff that's underperformed. But at the same time, do we expect any big pullback generally in the market? I don't know about a big one, but I think you always have to expect maybe a 5 to 10% pullback in the market. You know, I think the stat is since 1928, and every 346 days, we get about a 10% correction. So we're a bit overdue for that, but I wouldn't plan your portfolio around that. These things come and go, and I wouldn't be surprised we get a little volatility as we lead into the inauguration, and then after it, when we start to get some confirmation on positions in the Trump administration.
Gotcha. Well, thanks, Graham. We appreciate the expertise, and thank you to our listeners. And we check out our social media pages, check out our website if you want to go back and look back at some of the old weekly wrap-ups we've done in the past for this year. And we look forward to seeing you next time. Have a good day.
Take care.